Let's talk about the good, the bad, and the ugly. This is your market update for today, Monday, January 13th. I hope you're watching this particular update video in time because there's a lot going on. The overall market is a whipsaw mess. You have these quantum computing companies absolutely nosediving. You have Trump's DJT ripping to the high heavens. And you have this guy with two thumbs losing a lot of money in the market. So as you can imagine, we have a lot to talk about. Before we get into that, don't forget to like, don't forget to subscribe. And now, let's rock. By the time the world's largest casino went dingity ding 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 today, the official headline was Dow adds more than 350 points, but Nasdaq closes lower as investors rotate out of tech. As you're about to find out, not only was today a bunch of whipsaw mess, that's what the rest of the week is going to contain. So for those of you who will enjoy the visuals a little bit more, not as red as the open would suggest. Some tech names, specifically NVIDIA and really semiconductors, were hit because of what Biden had to say and basically, hey, don't trade as much as you were with China. The rest of it, a nice recovery. So that led to things going up and up and up. You could see big gap down, but strong recovery in the SPY, the Qs, the Russell. The SPY ended the day slightly in the green, the Qs slightly in the red, and the Russell, the small cap sector, slightly in the green. So yes, I want to get into that, but I also want to talk about what in the world's going on with DJT. A little round of applause because that was up a beautiful 21.5%. And I also want to talk about quantum computing, which was wrong answer, down 32. So as I said, we're going to get into the good, the bad, and the ugly, but we're going to do it in reverse order. We're starting with the ugly, which I'm going to tee this up by saying the ugly was the overall market. Now, obviously, if you were bullish buying the dip, you'd be thinking that's not ugly at all. But like I said, if you were this Dumbo right here, I sold a bunch of calls and it cost me a pretty penny. And the frustrating part about this is I knew it was coming. If you watch the update video, the most recent one from Sunday, the week ahead, I referred to this thing as saying, hey, watch out for the Vanna rally, V-A-N-N-A. If you don't know what a Vanna rally is, it's basically this. There's a bunch of people who buy puts and then they decide to close when volatility gets crushed. So when you're closing out puts and volatility is going down, as we saw throughout the day today, that means that market makers don't have to hedge to the downside as much. When they don't have to have so many short positions on, well, they cut them, they buy them back, obviously pushing things up. And as the market goes up, people then get enticed to buy calls, adding positive delta to the system. And that pushes things higher and higher because that means market makers then have to hedge by buying. So the Vanna rally is basically saying, okay, that bearish downswing is done and time to go to the upswing. I explained that in more detail in the update video, but my point is, do you know how frustrated I am at myself calling that out to be a thing to watch for, and then I didn't watch for it and it cost me money? I cannot describe the fact of how much I hate the person in the mirror. Anyway, if you look at the options flow throughout the day, let me split this up so you can see calls and puts. Pretty much ever since 12, but really from the get-go out of the gate, puts were being covered. This is people closing out puts, the dark blue, the light blue, closing it out. And as we started to go up, guess what? People started to buy calls. This is everything you need in the recipe. These are all the ingredients you need for a nice Vanna rally recipe. And that screwed me. So we're starting with the ugly, which happened to be my own trading. Now, moving on for the overall market for the remainder of this week, I do want to remind you that we are in trading week number 3 of the entire year. And this is the 4th most bearish week of the entire year. Now, is that a guarantee that this is gonna be bearish? No, but I'm just saying on a seasonal basis, this is not such a bueno week. This particular week for this particular year is going to have a lot of craziness because tomorrow, an hour before the market opens, we have the PPI inflation report. On Wednesday, we have the CPI inflation report. On Thursday, we have retail sales. On Friday, we have one of the largest OPEXs we've ever had ever. And then on Sunday, we have TikTok probably being banned. On Monday, the market's closed and the president-elect is going to be inaugurated. So basically, this is the last time you're going to get a little bit of rest. If you enjoyed sleeping, I hope you remember that because for the next week, it ain't gonna be coming. I should also add on, the fun doesn't stop there. We're also in earnings season. Officially underway this week, we have a whole slew of financial earnings starting Wednesday. JP Morgan, Citi, BlackRock, Wells Fargo, Fargo, Goldman Sachs, and then on Thursday, TSMC, United Health Group, Bank of America, Morgan Stanley, PNC, and then next week, not only is it a holiday week, a shortened week, but that's when we start to hear from our favorite tech names. So that's all the craziness. Now it's time we get on to the bad, which happens to be quantum computing, which absolutely vomited. Quantum stocks like Rigetti plunge after NVIDIA's Huang says the computers are 15 to 30 years away, and it didn't stop there. So this came out on January 8th last week, and then Zuckerberg made it even worse. Quantum computing stock sell-off accelerates as Zuckerberg comes latest tech CEO to temper sector enthusiasm. Basically, a lot of negative Nancys that are very influential, and it caused Rigetti to drop 32% today, and from its all-time high down 72%. IonQ from its all-time high down a nice 49%, losing 14% today. If you look at D-Wave from its all-time high to now down 67, today losing 33, and then Quantum Computing Inc. from its all-time high down to now 76%, today losing 27. These things are getting destroyed. This is not a short attack. These companies, from a fundamental perspective, were very weak at those evaluations. I'm not saying in the future they can't grow into them, but they were trading at massive multiples. From a fundamental value, they were being overvalued at that moment in time. In my humble opinion, these sky-high values that we saw were not points to invest. If you're an active trader and you're like, nope, I'm playing the bull trend, I'm playing the bear trend, have at it. You can make money both ways. But to say that this was some sort of fair investment value, well, you just kind of have to look in how to do a fundamental breakdown, because these things, most of them are losing a lot of money, and they were ripping. They were just fundamentally overvalued. I'm not saying that they'll always be fundamentally overvalued. Of course, the entire market and companies are dynamic, but to not realize that the boat was getting a little too hot, this rocket was getting a little too hot as it was going up, I think that at that point, it's just being a little bit greedy. Also on the news of bad things, breaking news, SEC charges Robinhood with securities violations. Brokers should pay $45 million in penalties. You know what? I'm looking this up live, haven't seen it. Lost 1% today in post-market trading. Actually, not down that much. For getting hit by a fine by the SEC only being down 0.5%, little bit surprised. So we've gone over the ugly, we've gone over the bad, now let's get to the good. As I alluded to before, President-elect Donald J. Trump is going to be inaugurated a week from the point that I'm filming this, on Monday, January 20th. And obviously, there's a lot of excitement. And one of the most direct ways to play that excitement is through the ticker representing the company that he owns most equity in. And I'm talking about Trump Media and Technology Group, DJT, up a beautiful 21%. Now, your first question is this a squeeze? And I don't want to be a party pooper, but the answer is no. The short interest was only 4.8%. The short interest in terms of shares, 10 million. Cost to borrow, very low. There's simply not that many shorts. The utilization's nowhere close to being maxed out. So what we have going on here, if you ask me, and actually I could prove it to you, not only is it up a lot today, 21%, I could show it to you in the options market. There is an insane amount of call buying. So when you see this much call buying, the stock ripping so much, and yet not that many shorts, what does that most likely mean we see in front of us? It's referred to as a gamma squeeze. The stock ticker DJT is currently in what's referred to as a negative gamma environment. You're either in positive gamma or negative in gamma. Has nothing to do with being bullish or bearish. It tells you about how the market makers have to hedge. When you are in a negative gamma environment, which DJT is, that means that the market makers have to hedge by going in the same direction that the stock is going in. So as the stock goes up, the market makers have to hedge by buying more because they're on the hook for all those calls. So as it goes up, people get excited and they buy calls, which forces the market makers to hedge, and they're hedging by buying, pushing it up. That creates more FOMO, and you can see how it's a positive feedback loop. So what we have going on right here, and I'm showing you right on the screen, tons of calls being bought as the price is going higher and higher. This is most likely a gamma squeeze via the options market, not necessarily a short squeeze via the equities market. So I just want to clear that up. But regardless, gains are gains, and I hope you're making a ton. That's what I have for you. Obviously, let me know in a comment below what equities or crypto you want me to be covering in these daily updates. If you enjoyed it, don't forget to like, don't forget to subscribe. I appreciate your time. I'll catch you in the next one. Peace.